Apple reported fiscal year 2023 first quarter results recently, so I thought I'd go through the important figures and share them with you. So let's get right into it. Starting with overall revenue, which decreased to 117 billion in the first quarter. This was down from 124 billion last year. Earnings per share of $1.88 decreased from an earnings per share of $2.10 in Q1 last year. So Apple has not been immune to the macroeconomic headwinds impacting the rest of the overall worldwide economy. Several companies have been reporting sales decreases or sales decelerations compared to last year, and the robust double digit and above growth rates that many of these technology companies experienced in 2021 and early 2022 is now falling to the wayside as consumers change their spending behavior, right? We're not buying electronics as much anymore. Now consumers are going out, spending money on away from home experiences like restaurants, like travel, and things of that nature, and it's hurting companies like Apple. iPhone revenue declined to 65.8 billion, down from 71.7 billion. However, the supply disruptions in China hurt sales of the higher end iPhone 14 Pro and Pro Max. Some estimates suggest by several million units. And so, accounting for that, sales iPhone revenue may have been flat-ish instead of experiencing this big year-over-year decline. Services revenue grew to 20.8 billion. This was up from 19.5 billion, and this is a critical component of Apple's business because services gross profit margins are above 70% compared to its hardware gross profit margins, like products like the iPhone. Those are lower, near 34-35%. So every dollar of services sales is roughly equivalent to $2 in hardware sales, just in terms of profit margins, not accounting for any of the supplementary benefits from selling an iPhone, right? You can't really sell that many services without selling the iPhone first. So, stripping that out, services is supremely beneficial to Apple's profitability and profit margins. iPad revenue jumped to 9.4 billion. This was up from 7.2 billion as Apple released new models and finally surpassed these headwinds they were facing with iPad shortages and supply shortages impacting the iPads. They've worked through those, and now they're getting to ramp up production and meeting customer demand. Cash flow from operations dropped to 34 billion. This was down from 47 billion in the same quarter last year. That's a big drop, but still, if you think about its overall cash flow from operations, it generated 34 billion in cash flow from operations on 117 billion dollars in sales. That's incredibly efficient in terms of cash flow to sales ratio. That's really good. Any company in the world would love to have these kinds of cash flow to sales margins. And finally, the company repurchased 19.5 billion in its common stock during the quarter. That signals to me that management still thinks that the stock is undervalued. And going into the quarter, I had said that I thought that Apple stock is a buy. I had recommended Apple stock as a buy. Coming out of the quarter, I would still recommend Apple stock as a buy. The company, as you can see, is doing an excellent job attracting customers, selling its products at very good profit margins, and continuing to demonstrate innovation in the long term. The iPhone is in its 14th iteration and still generating billions of dollars in sales, right? So that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.